Okay, thank you for coming to the session. This session is dissecting the deal, analyzing mergers and acquisition. I have with me a distinguished panel, and I would like them to introduce themselves. Firstly, we have Andreas Flaig from Carlson Rezidor, EVP for Asia Pacific, and we call him Andy.
That's right. I'm Andy Flaig, as Hock said, EVP Development Asia Pacific for Carlson Rezidor Hotel Group, based in Singapore. In my prior life, I've been a consultant for 15 years for Arthur Andersen and JLL, and have been involved in numerous M&A transactions in China, Asia Pacific, and globally as well. I think my colleague Javier mentioned to you earlier, we are a global hotel management company with a portfolio of about 1,500 hotels, including pipeline, 110 hotels in operation in Asia Pacific, both managed as well as franchised. And I guess another noteworthy thing maybe to point out is you may have followed the press at the end of April. We have announced that we will be inviting a new investor to our company, H&A Group out of China. I'm happy to share some, but not obviously able to share a lot of details about that transaction since it hasn't closed. We're looking to legally close that transaction towards November, December of this year. I'm happy to be here. Thank you.
Thank you. Next, we have Andrew Turner from the Mantra Group. He is the VP of Acquisition, Asia.
Thank you and good afternoon. Thank you for coming, those of you who are here. I'm sure everyone else is about to come in. Andrew Turner, I'm Vice President Acquisitions for Asia, a position I commenced in January of this year. I opened the Singapore office for Mantra. In previous roles, previous to 3 years before that, I was EVP of Silver Needle Group here in Singapore. And then for about 18 years prior to that, I was with the Mirvac Group. I was CEO for the last 15 years of those, growing it to a company of around 50 hotels until it was acquired by another significant company. So a little bit of experience in that regard. Mantra is an interesting company. It's Australian-based, got about 140 properties operating at the moment, a majority of which are in Australia, some in New Zealand and some in Indonesia, in Bali here. We operate a number of different ways. We have most of our agreements are management contracts, but we do have some leases, and we do have a number of what we call management letting rights, where we get involved with developers and effectively buy the letting business of that from the developer or from the person who owns it. And we operate a number of those particularly in Australia, but we're also looking at a number of opportunities of that model in this part of the world. Great success story is that Mantra listed on the Australian Stock Exchange some 2 years ago, and has market capitalisation now of 1.5 billion. That's Australian or Singapore, since they're both the same at the moment. So good to be here. Thank you.
Thank you, Andrew. Next, we have David Wray. He is from the Wyndham Hotel Group, VP of Acquisitions and Business Development, Southeast Asia and the Pacific Rim.
That's right. I've been with Wyndham for probably 15 years, in charge of development based in Singapore. Wyndham is one of the larger groups. We've got 8,000 hotels across the globe. A lot of those are franchised. These days we're branching more into management. To give you an idea of the pipeline that we've established already in Asia, this year alone we will open 4,500 rooms across all of Southeast Asia. And I think next year our target is about 7,000. So a fairly rapid growth curve. I also represent the timeshare division of Wyndham, and that's the largest timeshare division in the world. We look to buy mixed use and acquire mixed use properties where we will actually put cold hard cash down to buy a number of apartments or a number of villas or a number of condos, and then we'll manage the entire complex under one of our hotel brands. So we've got a fairly diverse business model.
Okay, thank you, David. Next, we have actually Willie Wong from Goldman Sachs, Managing Director, Special Situations Group. Head of Asia Pacific, excluding Japan.
Yeah. Thanks, Hawk. So yes, my name is Willie Wong. I'm with Goldman Sachs Special Situations Group. I have been with the firm for 14 years, 12 of which in this team. So the Special Situations Group is a very simple business. We are an investing and lending business, multi-sector and multi-asset class. We invest the firm's balance sheet across all opportunities in the region. So I personally am responsible for the Southeast Asian part of the business. And in terms of the real estate side, we currently, if we look at our portfolio, we have exposure of various forms in the hotel space across Japan, India, Australia, and Southeast Asia. But again, I guess I'm the only person on this panel who's not a real estate specialist per se, but certainly we have a good amount of exposure and interest in this segment.
Okay, thank you, gentlemen. Thank you for being on this panel. This panel is about mergers and acquisition. But firstly, I guess we really need to figure out if there is a difference between merger and acquisition. So the thing is that with the idea of mergers, not murder.
Might have been the same.
It could be murder
Could
in
be a
some
difference
places. But for mergers and acquisition, it's really is that 1 + 1 has to be more than 2. So hence, there has been a number of such mergers and acquisitions, I think in the past 1 to 2 years. I mean, if I can just list a couple, we are not talking about these deals per se, but the few that had been in the press and announced is, of course, Echo Hotels acquiring One Fine Stay, Marriott to buy Starwood, Echo Hotels, which has acquired Fairmont Raffles, HNA looking to buy Carlson, Fraser's Hospitality, they have bought the Malmaison Hotel Devon, and also I think 4 other regional UK hotels. And of course, I think the other big ticket item is Xinjiang buying Louvre Hotels Group. So okay, let's get on into the panel questions quickly. Well, the thing about this is what drives the need, really, for hotel companies to consider mergers and acquisitions. Andy, can you give us your insight on that?
Well, look, I think there's a host of reasons. I think to begin with, I think the initial intention, of course, is for all the management companies to grow organically. I think that's what we call our bread and butter business. But I think in recent years, if you look at the hotel industry, maybe over the last 10 to 20 years, where a lot of the larger hotel companies still owned real estate, and the fee income and revenues of those hotel companies were not only derived from fees, but maybe also from smartly divesting from real estate. I think if you move that forward to today, it seems that most of the global players have adopted an asset-light strategy. And I think on that basis, the question is, how do you accelerate the fee stream? And how do you satisfy your shareholders? And I think one way to do that, above and beyond the bread and butter business, which is organic development or organic growth, is to look at inorganic growth. And I think that's where we start seeing activities in the M&A space. That can be for financial reasons, can be for strategic reasons, and maybe we'll get into some of that a bit later on. But I think ultimately, in my view, the change of our industry and how we actually generate revenues has changed, and I think the growth has to be accelerated going forward to satisfy shareholder demands.
And I guess whether bigger is better. That is the question.
To some extent, yes.
Okay, great.
I think I'd also add, from a publicly listed company, there's always the need to drive more shareholder revenue, right? So from a Wyndham's perspective, we generate a lot of revenue from our franchise fees.
Yes.
So we need to go and expend that money somehow to boost more revenue, to put more profitability back into the shareholders. So that's why we'll continue to look to acquire.
Yeah, I was going to say the same thing, because if you're a listed entity, then you have to grow
Absolutely.
at a certain rate, and that rate of growth is unlikely to be
organic,
supplied
yeah.
by market growth or management contracts. I mean, as successful as we are in generating management contracts, you have to do a hell of a lot to get to the growth expectation. And the other point now is because of the situation of the markets, I think most parts of the world is you can raise money, and the markets are there to raise money. So Mantra went to the market recently to raise some money for an acquisition in the United States, and it was oversubscribed several times over. So there's money available there, but once you've raised the money, you've got to use it.
What next?
It's not much point in leaving it. You can't leave it in the bank because it doesn't make any money. So you need to expend that money. And the other thing is debt at the moment is also relatively cheap. So you've got this combination of equity and debt, but you've got to use that money. And acquisitions is clearly one way of doing that.
And would you look into acquisitions of companies where they are asset heavy or light?
No.
Light.
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 Because it's very unlikely you're going to get a decent return on capital with companies that are asset heavy, clearly.
Okay.
And the good thing about the management business is generally it is asset light.
Yes.
Because that's where the capital partners come in. But certainly in some of our investee companies, some of the rationale for them entering into acquisitions in certain cases is to acquire access, be it access to a local domestic skill set and know-how, or an access to tier 2, tier 3 cities where, again, the local knowledge is a lot more critical. And also just access in some cases just to even staff. So when we talk about build versus buy, I think increasingly we're seeing some of our hotel companies running into issues staffing and finding good quality staff. And the turnover has been heavy in certain cases.
Right. And it also could be a case of, if you were to start from scratch, greenfield, it's going to take a long time to get that product up. And you may not, be in the cycle to capture the profits. So maybe acquiring, in the case, I think, some investors' view is to acquire the assets, and in particular, probably distressed assets that there could be potential, growth in their value of their asset. But I think coming from the management, hotel management side, then it's really clearly asset like is best.
I mean, I think so. I think we all seem to agree, organic growth is hard work. I think it's very time consuming.
Yes.
And I think we also know that, to start a new brand and grow that brand sufficiently is also extremely capital intensive and time consuming. So if the market presents an opportunity where you could buy a brand, then clearly you've got to think very hard. Isn't that a better avenue to go? And clearly you've mentioned some deals. On top of the ones you've mentioned, of course, there's been others like Marriott buying into Protea, Marriott buying Delta, IHG buying Kimpton. Just to add a few more to your list, where clearly they have not only bought the company, but it seems to me they have also bought the brand and the history of the brand and what that brand represents to, in a way, shortcut the growth and growing their stable of brands.
It might also be a brand that's required in that organisation's portfolio, but also the geography. Some of the recent acquisitions have been clearly for geographical reasons. That they are.
Yeah, they're not in that.
Their properties.
They're not in that area.
The target has got a lot of properties in countries or regions that they're not strong.
I would also say technological reasons too. We acquired the Dolce brand in the US. Largely for their platform of technology they had.
Yeah. I think Gaurav was making a comment yesterday about when Accor looked at Fairmont Raffles, it seemed the US piece of that acquisition seemed to be especially important to Accor. So I'm just quoting what he said yesterday on the panel. So going back to what Andrew just said, that certainly seems to be the case.
Okay. Is there such a thing as when is the best time for a transaction? Maybe Willie?
Well, I think from the, obviously, the investors and capital's perspective, political stability, economic stability. In fact, perhaps counterintuitively, in times it's actually low growth environments when companies are struggling to drive growth, drive RevPAR growth. In fact, that's actually when acquisitions actually become even more interesting or more viable, perhaps. So valuations would be somewhat more reasonable, and at the same time, I guess both parties are looking for that growth that is not coming from the existing properties. And as you say, new builds could take you 2 years, 3 years, as opposed to something that you can execute over a 6-month period.
I think if I could add, I would always say that it takes two to tango, which means it needs a buyer, but quite frankly, it also needs a seller. And I think for many years, if I go back...
And a reasonable seller.
And a reasonable seller, of course. And I think if we go back maybe a few years, I don't think there has been as much M&A transaction compared to, say, the last 2 to 3 years. And that would suggest to me either the capital wasn't there, or quite frankly, there was no motivation on behalf of the seller to say, or on behalf of the shareholders to say, I want to sell, I want to either get out or invest my money differently. It seems certainly the last 24 months, a lot more buyers and sellers seem to find agreement. As Willie said, the capital seems to be there as well, right? So not only do you need two to tango, but you need the music as well. So that's clearly the capital, and that seems to be all in place. So it's the perfect storm when you look at an M&A market, I think, to most.
So this is the right time.
And as you say, there has to be a willing seller and a willing buyer.
Right.
Otherwise, it's not going to happen. I mean, I'm sure there's plenty of great companies out there that we've all looked at and thought, well, not much point in wasting much time on that because they're never ever going to be available, right? So,
Correct.
Yeah.
Because they're family owned, or because of this, because of that. There could be a variety of reasons. All their price expectations are ridiculous.
Yeah.
Okay. I'm sure, well, many of you have looked at many deals. What are the common mistakes maybe that one may do in such a transaction when you're looking at it? That comes to mind. David? Any?
Probably comes down to your due diligence, I guess. Realistically, probably the staff is probably the one thing I think that you usually end up being tripped up on.
Okay. You mean the integration of the staff?
The integration,
Right.
understanding, and the cultural sensitivities. That's the other thing that I think is one of the more dangerous things.
Yeah. So I guess this also comes down or boils down to if this is a merger or an acquisition. I think there is a difference in this too.
To be
right?
honest, I think most
are
deals,
acquisitions.
No, most deals tend to be a merger
Mergers.
because, like Andreas said, you've got to have two to tango.
Yeah.
And so it becomes a bit more of a merger and a bit more give and take than just a straight acquisition.
But if it's a merger, it's likely that you would form a new company to move forward, new shares issued, and if it's an acquisition, it's more likely the target company or target hotel company would then not cease to exist thereafter, after the date, and the one acquiring then just becomes, the sole one going forward.
You try and fold it all in, right?
Yeah. Of course, there are some acquisitions that are negative, that are hostile, if we call them, and then there are some that are purely for whatever economic sense it makes sense. So yes, clearly, I think DD and the people's issue, right?
I think the DD is particularly important. I've been involved in a few smaller transactions where mistakes have been made in the due diligence process, particularly acquisitions of management companies, because what effectively you're buying is management contracts. And you've really got to understand what those contracts say. And as I said, it might seem strange, but you're buying effectively the value of the contract. That's what you're buying, aren't you?
Yeah.
X years times X
That's
number of
right.
fees, that's what you're buying. But some contracts have slipped in some strange things which have, like change of control, which might mean the end of the contract, or change of personalities. And I've seen a couple of those before. So in answer to your
there's some
question,
contracts,
what,
yeah.
you know, what mistakes? Well, not reading every single line of every single deal to make sure you know where you're getting, you know.
I mean, if I could just ad hoc, you know, as an example, if you look at our pending transaction with H&A, to me that would be an example of an acquisition, because H&A per se is not a hotel company.
Right.
It is a very large Chinese investment company that happens to have a very, very good understanding of the hotel industry, the travel industry, the airline industry. To me, that is an acquisition. If you look at the Accor Fairmont or, say, the Marriott Starwood transaction, to me that is a typical merger of two companies where there is, to more or less degree, a fair amount of overlap on people, on brands, on properties, etc., which you would traditionally maybe not have in an outright financial acquisition.
Yeah.
So,
I think
so Andy, with H&A, obviously acquiring the resorts now in Bora Bora, do you think H&A will go to an asset-heavy model?
I really can't. I can't say. I can't speculate. Like I said, the deal hasn't closed yet. We're legally closing towards the year end, so I really can't speculate about what the future strategy is. Yes, you're right. They have made some single asset acquisitions. They have also made some single asset acquisitions in China. They own and operate hotels in China. And of course, they have also made, in the past, two other corporate investments into other brands. One is NH in Europe, and one is Redline in the US. But I wouldn't be in a position to comment about any future strategy post-closing.
well,
But maybe we can talk about that next year.
Yeah. Well, it does seem like this particular deal is a vertical integration because they're not really in this hotel space.
Yeah, I think there's not only acquisitions and mergers, and looking at it from sort of those two perspectives, I think when you dissect those deals, I think you can clearly see some maybe are more strategically driven, maybe some are more financially driven. And I've, as I said, having been a consultant in my prior life, have been involved in some of those transactions, and they're very, very different in terms of how people approach those transactions from a strategic standpoint versus a financial IRR standpoint. But to go also back to your earlier point, I think one of the pitfalls that I've come across when having been involved in transactions is that there hasn't been enough time, not only on due diligence, but really on post-merger strategy or post-acquisition strategy. It was all about, okay, well, what do they have? How much does it cost? You know, what are the risks?
It's just all about
what's the
numbers.
value? But it hasn't been so much about what are we actually going to do with it? You know, what are we going to do post-acquisition in the first 12 months? What are we going to do in the first 2 years? So I've seen some investors who haven't quite thought that through enough, and who then have had challenges with the acquisition after.
I'd add to that to say, in fact, you know, certainly some of our experiences, some of the issues we've run into, I think goes back to the whole JV partnership discussion earlier, where the DD has to extend at the principal level for people to understand what the objectives are, what the strategy is, and oftentimes, you know, especially in a merger, perhaps less so in an acquisition, I guess you need to make sure that at least at the top level, the vision is the same, everyone's moving in the same direction, rather than, you know, turns out later on, okay, apparently these two now co-owners don't really see things the same way or trying to take the business in different directions, and that's going to basically stall the whole company for, you know, a very long time.
Okay. Well, I've kind of categorized the key phases in any transaction. The first one being growth and portfolio strategy, where they are at and what they want to do. The other one is due diligence, which you have touched on. One very key factor is integration planning. So a lot of work has to be done on that. Then integration execution, after you plan, how you execute, project management, and change management. All these would actually tie in with what David has said about, if you think about the human resource issues, what about IT, right? The integration of the various, the companies, their different platforms, and even their whatever other systems that they may have. So I suppose we have touched on that, and I would take it that sort of due diligence and human issues are the two key ones. Is planning or execution? Do you think that is key as well? Maybe Andrew?
Implementation.
Implementation.
Yeah, sorry, the implementation planning. It was interesting that Gaurav said yesterday that it took 6 months from signing to completion. That sounds a hell of a long time, but I bet they needed every day of that 6 months.
And maybe more.
In a transaction as complex as that.
Right.
But I think maybe in the past, people have rushed through transactions, and then when the completion of the closing day came, was everyone ready? I mean, that could really catch. And then post clearly is really important. I think, the smart companies are ones that look at their target and determine what works with the company and what's complementary. You know what I mean?
Yeah.
Other opposed to ones that assume that because we're bigger, everything we do is better than them. And I've seen this firsthand, whether the bigger company thought we do everything better than they do. But I can guarantee that the smaller company, whoever they are, not without naming names, some of the things they do are going to be a hell of a lot better than the bigger company. So the trick is, let's look at this company. What can we learn from them? You know what I mean? Before we start making everything the way we do it.
Yeah, and the other thing I would also add is the customer. All too often, even now, as a group of hoteliers up here, we're sitting talking about the inside business and the merger and the acquisition, but we need to start focusing on the customer. I'm sure Marriott and Star would have spent a lot of time looking at how they're going to integrate their loyalty program into one program and how they're going to communicate that back out to each customer and so forth.
I think besides the customers, there's also the owners, right?
Yeah.
We have quite forgotten about the owners, and look, I've signed with company A, and my contract goes for X years, but come X months later, I'm with company B. So what does that mean, and how do my contracts pan out?
Well, not to mention that there's now company A on that side of the road, company B across the other side of the road.
So it's happening right here in Bali, I'm sure. And many of them right next to each other. And I'm sure those contracts, I'm sure the lawyers are spending, making good money on that deal, figuring out what that means.
I guess everyone is rereading the AOP provision, right? For sure.
Yeah, because, definitely AOP is one of these things that might kick in, or will kick in.
Yeah.
Lots to think about when you are wanting to do M&A. Okay. Maybe a little something closer to our hearts. In your opinion, right, whenever such an M&A happens, which scale of hotel or which market segment do you think will be most impacted? Which scale? So is it your mid, upper scale? Which market segment? Is it your corporate travelers? Is it,
I don't think it matters. I mean, if we were to acquire a 3-star mid-scale property, a mid-scale group, we'll fold it back into the mid-scale group that we've already got.
No impact. Andrew, anything?
No, I don't think it really matters. I mean, I think every segment. But having said that, though, in terms of the post-implementation, your comment about customer, clearly that's terribly important that the customer, whatever segment they're in, whether corporate, leisure, whatever, really understands, especially their loyal customers, really understand what it means to them for these two companies to emerge.
Right.
I mean, that's the communication piece, I think, and being very clear on what the communication is in terms of the impact to the customer.
Perhaps not directly what you're asking, but certainly in terms of, if we look across the segments, my personal opinion is, you look at the budget segment, for example, the consistency is very poor. There's not a lot of branded presence. So in that sense, one could argue that there could be an opportunity for someone to come in and provide that consistency. and build a brand at that budget level, because again, at the 5-star level, 4-star level, people understand the brands. But at the budget level, mostly mom and pops, and you don't really know what you're getting
You don't really
into.
have a
So,
standard,
having a brand there, I could see that being a
Being a
feasible
plus point.
strategy. Yeah.
Okay.
Well, I guess in China we've seen a lot of M&A activity in that budget space, especially, right? There's been a lot of consolidation the last
I think they're really struggling
5, 6,
now,
7
though, right?
years.
The Chinese model has certainly gone through a very strong wave, but now it seems like that they're running into some real issues. And if you look at some of these listed companies that have now been taken private again, they're on a lease model, for example, and so the leases are very short in China, which is actually affecting their valuations quite substantially. They're probably now 6 to 8 times EBITDA, and people are really questioning, are we at that point where they're going to struggle to carry on growing? Because again, as a listed company, as we alluded earlier, there's a lot of pressure to keep growing at the top line. And I think over time, the underwriting standards, you had to kind of keep chopping out and chipping away to drive that growth forward. And I think we're at that point where people are starting to question, is that still sustainable? Or is there going to be a fundamental flaw in that business as it grows?
Okay. Well, we did talk about the acquisition of Fairmont by Accor, and Gaurav did say, this will provide or increase their profile in the upscale hotel segment. But what do you see that, because Indonesia, we're here, so Indonesia is a mid-scale based market, right? What benefits do you think? Is there any benefits in this merger?
Well, there were a few. There's a Fairmont and there's a Raffles in Jakarta, aren't there?
Mm-hmm.
So there are a couple of luxury hotels coming into the portfolio in Indonesia, but only a couple, I think.
Only a few, yeah.
Yeah. So there's not much impact for the Indonesian market in that sense.
I wouldn't have thought so.
All right. So as hotels companies merge, any comments on where you think what will become of all these multi-brands? Like,
You mean as a result of the
maybe that's a
consolidation?
question for David. You've got so
Well,
many brands, right?
I think we've got 14 brands at the moment. Would we want to acquire another property and keep another brand? It depends. It really depends on the price we're paying, what we're paying for, what the true brand equity of that is. We would probably look to co-brand initially if we did that. So, yeah.
I was going to ask, how willing are operators willing to, consolidate brands or retire a brand that's underperforming? Is that happening, and is that going to happen more, you think?
No, I think, from a Wyndham perspective, each of our brands has a pigeonhole, for want of a better term.
I was
across
thinking
the
more
globe.
on integration. Obviously, you'll have more overlapping target markets. Do you expect that's going to be a common trend?
No, I don't think so. That'll be fine.
I don't think so either. I think, I don't know if what Marriott or Starwood's view is, but my understanding, what I read in the press, is that they're not looking to, literally they're merging all of their brands together. I think it'll be 30 in total, if I'm correct. I think, again, the companies, we talked a little bit about that before, I think the companies have spent a lot of time and effort and capital to build brand equity for any of those brands. I think to basically just write them off or merge them into something else, I don't really see that either.
Yep.
Is selling one of the brands off an option, you think?
After acquisition.
After the acquisition? No.
I don't think so, because they paid a premium for the brand, so they're not going to recover whatever premium they paid, I don't think.
Yes.
Okay.
And also, a lot of these mega mergers, they can't really, you might say Sheraton and Marriott are similar, right? But there's a lot of places where, there's a Sheraton on that corner, there's a Marriott on that corner, there's a Sheraton on that corner. So you make them all Marriott, so suddenly you'll have 6 Marriotts in the same corner.
Yeah.
So.
Yes.
Just build a bridge.
Yeah, that's true. Okay, maybe one last question from me before we throw it out to the floor. In the context of Southeast Asia, right? How do we think this, we have a lot of domestic brands, and now with all these mega mergers and acquisitions, do you think there's still a space for domestic brands?
I think there's a hell of a more opportunity for regional brands. And I think we're a regional brand. We're not a multinational. We're a regional brand, and national brands as a result of this consolidation, because effectively some owners are getting less choice. You know, you've got 4 or 5 mega companies, and then you've got the regional guys such as us, and then you've got the local guys. So I think it actually provides more opportunity, not less, for the regional and local companies.
Is there something, David?
Yeah, I was going to say, from an acquisitions point of view, I've got a document here from my good friends at Jones Lang LaSalle.
Oh, okay.
Oh, I need to give them the plug there. There's actually 88 companies, 88 hotel management companies with between 5,000 and 15,000 rooms. So whatever way you want to look at it, there's probably a lot more mergers and acquisitions to occur, right?
Going forward.
Absolutely.
Going forward.
Yeah.
So...
At the sort of next level down, as opposed to the mega level, right?
Yeah, exactly. Well, you go the next level down, and there's 103 hotel management companies with 2,500 to 5,000 rooms.
Yeah.
Right,
That's still a big number.
still a big number.
Have you got a list of all those companies?
No.
No, but I would support that view that David has. I think while it seems at the moment the mega mergers seem to have commenced and started, and quite frankly, I don't think that has even ended yet. I think we will definitely see more tug-in acquisitions as we go forward. I think it certainly seems that certain companies seem to follow a more vertical integration and are looking to obviously grow that way. I think other brands are clearly stretching themselves horizontally, moving into, residences, extended stay products, et cetera, et cetera. So I think everyone seems to try and occupy literally every single space there is in the accommodation space. And in order to do that, acquisitions and mergers will be the way to go.
Yeah.
I think so.
The floodgate has just opened.
Yes,
Okay.
as long as the capital markets, I think, stay the way they are.
It seems to be quite
That's
healthy
up,
at the moment.
that's up to you, Willie.
Really?
I mean, if Willie turns off the
up to
tap,
you,
then
I
obviously
think.
we all have a problem.
Exactly.
I think, again, not the right forum for this, but certainly we have lived through a very ultra low interest rates across the globe, which is unprecedented, right? It's now been a good almost a decade. So as and when that party stops, there will be some interesting knock-on effects, and I don't think anyone's going to pretend to be able to tell exactly how that's going to pan out, but certainly as we said, cost of debt, cost of capital is cheap in for many years now, and that certainly has an impact on asset prices and strategies. So as that unwinds, we'll have to see how that unfolds.
Okay, we will wait to see then. All right, any questions from the floor? Anyone? Calling once? Twice?
Are you acquiring something?
Rio has
Because I
a
cannot
question.
really see. Oh, that's one from Rio.
Question for Willie. Your view about Indonesia in general in terms of investment opportunity?
In general, so not real estate specific. So if I take our business as a reference, we were actually more active in Indonesia and Southeast Asia generally before the GFC. In fact, during the GFC and for the kind of 4 or 5 years that followed that, Southeast Asia actually relatively outperformed. It was relatively stable as compared to the likes of Australia, China, and other parts of the region. So in terms of investment opportunity, we've shifted resources away from Southeast Asia for a few years. So, we didn't see the big drop and big recovery. Now, obviously, with the more recent commodities tantrums, Indonesia will have obviously an adverse effect on the Indonesian economy. Having said that, it seems at this point we've lived through the worst of it, as far as we can tell at this point. And so we're seeing, again, it's uncharacteristically stable, I'd say, for Southeast Asia generally and Indonesia specifically, which, again, for our business, which is a little bit more opportunistic and more dynamic, that actually gives us less opportunity. But again, on the flip side, I think for a local entrepreneur, that may be a good environment, a more stable environment would allow you to give the confidence to invest.
Follow up? Sorry, can I follow up on that? Just quickly, what are the biggest challenges in your mind of entering into Indonesia investment?
I think this is the typical, answer that any foreign investor coming into Indonesia will face. It is a jurisdictional issue, legal robustness. As we run a regional business, and certainly our sister groups will run the global business. Southeast Asia at this point is still kind of tagged with the perhaps unfair perception that things are difficult to achieve. It's tough to get business done. There are potentially a lot of issues if you work with the wrong partners, and the legal system is not there to necessarily, help you achieve or assert your rights at a minimum. So as compared to, say, in the region, obviously, you've got Australia, Japan, Hong Kong, Singapore. Those are obviously much stronger jurisdictions where, the contract is something that you can actually go to the bank with. I think out here, unfortunately, that is not the case, which just simply makes the partnership, the selection, which is a lot more critical.
Land tenure makes a real challenge
Yes.
too, right?
Yes. But in certain other countries, that's also the case.
Yeah.
Any other question on the floor? Victoria? Our MC?
Yes, hi, sorry. So my question is, I'm just wondering, just an opinion or thought, that now that we see so many acquisitions or mergers, what kind of synergies would be preferential? Would we say that a merger between cross-industrial companies, let's say with a hotel management company and somebody in research or data or even tech, is to acquire or to merge together, would those synergies still work as compared to maybe a hotel company acquiring or merging with another hotel company as of such?
That would be your vertical integration.
Well, you didn't you by effectively acquiring a company more in digital than hotels?
We used to.
Yeah.
Yeah.
I mean, from our point of view, our interest as an acquirer would be to acquire a company in the same space as us. Now, whether that's a hotel management leases thing, but I think it wouldn't make any sense for us to acquire someone that wasn't in the same area as us. That's just our perspective on that. But there again, we could be acquired by someone else. It depends if you're the acquirer or the acquiree.
Yes, whether you're the target.
Yeah, I think if the price was right, I think most hotel companies would love to acquire an OTA, for want of a better, to give you an example of that. But these days, the prices of the OTAs are up through the roof, way above the hotel.
Yeah.
Or maybe it's the other way around.
Yeah.
OTAs.
Oh,
with
so
IPOs.
they're acquiring you.
Acquire hotels.
They probably like their model a bit more, though.
Yeah.
So they're probably happy with their model.
Exactly.
Oh, okay.
Okay then, I think we have a good session, and thank you once again, panel. Thank you for your time, and thank you for the audience for attending.